Welcome back to the channel for another weekly portfolio recap. We just wrapped up a vital trading week packed with macro signals that gave investors plenty to think about. Headline inflation came in as expected, with July Consumer Price Index at 3.4% year over year, while core CPI cooled down to 2.5%. Coupled with a softer than expected Producer Price Index print, the broad market pushed up near record territory as investors gained confidence that central bank rate pressure may finally be easing. However, retail data and consumer sentiment remained mixed, showing that everyday consumers are still treading carefully. Amidst these shifting economic currents, our portfolio continued to show remarkable resilience, taking full advantage of broader tech momentum while collecting consistent cash flow. Today, we are breaking down our 8 holdings, looking at our performance numbers, checking our dividend receipts, and comparing our lifetime results against the broader market. Let us get right into the data. Let us look at our 8 core portfolio slices and break down how each holding fared over the past week. Our single largest position, Palantir Technologies, making up 32.3% of our pie, was our absolute biggest dollar gainer, rising 1.18% for a gain of $1,043.76. Our core fund holdings also delivered solid upside, with ETF and Dividend rising 0.76% or $534.98, and Dividend and ETF1 climbing 0.56% or $429.03. In tech and broad markets, Invesco QQQ gained 1.11% or $63.59. Nvidia added 0.54% or $100.97, and Vanguard S&P 500 ETF edged up 0.41% or $15.50. On the downside, Apple pulled back 2.28%, down $111.47, while Microsoft slipped 0.92%, down $53.75. Even with minor pullbacks in mega-cap tech, our high-conviction allocation in Palantir and our diversified ETF slices ensured our overall pie stayed comfortably green. Moving over to our 8-day whole portfolio price movement, strictly looking at capital appreciation before adding in any dividends. Starting on August 7th, 2026, our starting portfolio value was $274,867.82. During this 8-day period, we had exactly $0 in net cash flow added or withdrawn from the account. Through market movement alone, our portfolio generated a pure price gain of $1,824.83. This boosted our ending market value up to $276,692.65. Watching the underlying value of our holdings expand by over $1,800 without putting in a single dime of fresh capital illustrates the true beauty of staying fully invested in high-quality assets. Now let us check out the passive income cash flow that rolled into the account over this period. Reading through our dividend activity from earliest to latest. On August 13th, Roundhill S&P 500 Covered Call ETF paid us $24.93. Apple paid $4.22. YieldMax Magnificent 7 ETF paid $28.89. And Citizens Financial Group paid $5.89. Moving to August 14th, Morgan Stanley paid $5.30. Realty Income Corporation paid $13.70. Defiance NASDAQ 100 Enhanced Options ETF paid $10.20. Main Street Capital paid 3 separate dividend payments of 27 cents, 15 cents, and $44.19. Roundhill Innovation 100 0 DTE Covered Call Call ETF paid $17.80, and AbbVie paid $12.09. Summing up all 12 payout lines across these 10 distinct holdings gives us a total weekly dividend payout of exactly $167.63. Every single dollar represents real cash flow, adding continuous strength to our portfolio. When we combine our capital gains with our weekly passive income, we get our overall total weekly return. Taking our 8-day market appreciation of $1,824.83 and adding our earned dividend cash flow of $197.78 as reported in our dashboard, we lock in a total overall weekly gain of $2,022.61. That brings our overall money-weighted return for the period to positive 0.74%, lifting our portfolio ending balance to $276,692.65. Securing a gain of more than $2,000 in just 8 days proves how capital appreciation and dividend cash flow work together to compound wealth faster. Now let us step back to examine our all-time lifetime portfolio stats and benchmark comparisons. Since starting this account on July 24, 2020, with $0, we have deposited a net cash flow of $148,681.59. Our lifetime market gain sits at $128,011.06, while our total life-to-date dividends earned have reached $27,136.41. Combining market gains and dividend earnings gives us a total dollar gain of $155,147.47, reflecting an all-time money-weighted return of 318.79%. Looking at our M1 benchmark comparison chart, our main portfolio has achieved an all-time time-weighted return of 398.15%, with a 5.66% dividend yield. By comparison, Vanguard S&P 500 ETF is up 163.78%, Invesco QQQ is up 196.52%, and Vanguard Total World Stock ETF is up 133.45%. Our custom portfolio is outperforming these major benchmarks by more than double across the entire lifetime of the account. Let us break down our dividend tracker projections for 2026 to see what our passive income run rate looks like. According to our M1 dividend tracker screen, our total projected annual dividend income for 2026 is $15,600.88. Year to date, we have already earned $10,147.31 in dividends, consisting of $9,983.59 in paid income and $163.72 in pending income. We have an estimated $5,453.57 remaining to collect for the rest of the year, bringing our average monthly income projection to $1,300.07. Taking our $15,600.88 annual run rate and running the numbers, that equals $1,300.07 per month, or $300.02 per week. Breaking that down further, our portfolio is generating $42.74 per day, or exactly $1.78 every single hour, 24 hours a day, 7 days a week. Passive cash flow never sleeps. Looking ahead to next week, the market shifts its full attention to retail earnings and key economic updates. Big box and home improvement retailers lead the earnings lineup, with Home Depot reporting Tuesday morning, followed by Lowe's, Target, and TJX on Wednesday, and Walmart reporting Thursday before the bell. These results will offer crucial insights into consumer balance sheets following July's retail data. Beyond domestic retail, global tech and industrial names like Baidu, Analog Devices, and Deere will also report earnings. On the economic front, investors will parse the FOMC meeting minutes, global S&P/PMI readings, and regional Fed manufacturing reports. Central bankers will also be gathering ahead of the Jackson Hole Economic Symposium, making central bank speeches a major catalyst for potential rate expectations. We will keep executing our strategy regardless of market headlines. Thanks for watching, hit subscribe, and I will catch you in the next recap.